And welcome to the Market Alert for Monday, the 5th of September 2016. So this is Friday's chart. This is also before the market open. This is just the release of the non-farm payroll figures. And there you can see, having a look, and you can see there the forecasted figure was 180. It came out at 151. I'm just going to pause that there. And if we have a look here, you can see that August curse continues as payrolls rise by only 151,000. Hourly earnings disappoint. And what this means is that obviously the 180,000 was missed and it ended up being 151,000 actual, and this sent the market moving higher. And the reason for that is, as I said in the note that I sent out on Friday afternoon, is because Yellen is let off the hook. Had these figures come out above 180,000, then she would have had a problem in that she may have been painted into a corner to increase interest rates. At the moment, this gives her some breathing space and she doesn't have to increase the interest rate at the next FOMC meeting, which is on Wednesday the 21st of September. So we see the market put on 150 points into the first part of the session. And again, as I said in my note, this is a big move for a market that's going into a holiday weekend, which the US is. Tomorrow is going to see the Labor Day celebrations. I'm recording this on Sunday, so Monday is the Labor Day holidays. So after the medium impact news item there, we then see the market put in a short, and then the market puts in a buy and reverses back. And it's at this point I send out a note to say, look, this is not going to be a play ball. It's going to be sideways because of the final sort of holiday weekend for the US before we get back to normal from Tuesday. So we see the market then just trading sideways for the next couple of hours, and then eventually the market breaks and moves to the downside. And that was the reason why I sent out the note just after the buy signal, so that you could avoid having to sit around and stay and watch, because again, this is just indicative of what the market does during the build up to a holiday weekend, more so in the US than in the UK as well. We have more bank holidays in the UK than we do, or than they do in the US, which is another reason. So we see the market coming back 50 points there, and then just trading sideways again. You can see the orders aren't being filled. And then eventually the market is brought back by the plunge protection team, as you would expect. And that's who decided to call it a day and just switched off. So if we have a look at the daily chart, you can see the market trying to trade higher on Friday, which it did. The volume actually respectable, considering that the market was moving to the upside. But I would suspect that a lot of people were short and had to cover their positions, which is why you're seeing the volume increase there and the activity to the upside there. News-wise, for Tuesday, because that's going to be the next day, is the manufacturing figures. They're out at 3 p.m, so keep this in mind. And also the implied volatility dropping down to 10.04 during Friday's session there. So again, this in that area where we are going to get a big move to the downside. There's no doubts about that, because these levels are not sustainable for the implied volatility. As David Kaplan said in 1992, when the implied volatility is at the lows or historic lows, then the market will make a significant move, and no truer word has been spoken. If you go through all of the market alerts over the last few years, you will see where this is the case, and where we've had the market actually move from these sort of lows. And we have to look at the historic volatility as well. This also down in the lows as well. So really that's about it. So tomorrow the US market will be closed. Of course, the electronic system will be in operation, and no doubt the market will move in one direction. I would imagine that's going to be sideways to the upside, given there's no sort of major play by the US, but who knows. So it may be just worth just standing aside until everybody returns on Tuesday, and then we can get back to a business and see an increase in the volatility and momentum in the actual moves as well. So that's it. I will speak to you on Wednesday. Other than that, I will drop you an email in between on Tuesday if I see anything, or maybe tomorrow as well if I'm actually at the desk, and those of you that may be watching the markets too. Other than that, have a great weekend, and also Monday, and speak to you on Wednesday. Thanks for watching. See you in the next one.